Hello, traders. I want to talk to you about today's price action. It's still going on. We're midday, but I'm not going to be here end of the day, so I'm going to go ahead and do the video now. First, I want to address something that I usually just talk about regular trading hours only. But to properly set up the day, you need to mark your pre-market highs and lows because New York time, 7 a.m. is the open of the New York session. So you want to mark those pre-market highs and pre-market lows. And so I've got extended trading hours on right now. And the way I do that is I just put on a 30-minute candle. Like maybe I sit down at my desk at 8 in the morning or maybe 8:15. And I mark out these pre-market highs and pre-market lows, just like that. And I do it on any index, anything I intend to trade. Not so much on crude or gold or anything like that. It's just a different market. But on the indexes, definitely mark those out. And that's what I did. So 30-minute candle, this is 7 o'clock. I just mark the low of it. And if anything's higher than that, I'll mark it too. And that's our pre-market high and low right there. They should line up with that candle there. Very good. And the way price interacts with this is important because if this is the New York session, any liquidity that gets run during this New York session, it matters, it counts. And you can see we went above this 4 hour regular trading hour high over here during the pre-market session. We left this one making a lower high. That's the London high. We left it. Okay, so that's important to keep in mind. I'm also going to show you just a 4 hour in general. We have some relative equal highs up here on the 4 hour. And that's as high as we got today. We left those, making a lower high. That's important as well. If you look at the 4 hour from a panned out view, you can see we've kind of been in a range. This is a fair value gap to the downside. We poked into it, came all the way back down here, went all the way back yesterday. When NFP comes out this weekend or next few days, we're going to have lots of news drivers coming out. It may go straight back up there. You never know. But we're definitely in a range. On the weekly perspective, that's what it looks like. Kind of just in a little range here. Candle body's telling the narrative, wicks doing the damage. So today, are we going to come all the way down to here or here? I don't know. Maybe we take out the low of this candle and we go back up. We already took it out and we're keeping on pushing lower. You never know what's going to happen there. But was there an opportunity to get into a trade today based on the movement that we saw in pre-market? We've taken out this 4 hour high in pre-market. We've left that one, made a lower high. And so now we can just go to regular trading hours only. Okay, so what I would look for at the open for regular trading hours only, I mark out the high and the low of this first 1 minute candle because that's an important level. So at the open, we pushed up and we took out that 4 hour regular trading hour high again in the open market at 9:30, between 9:30 and 9:31. We took that sucker out. And then started pushing lower, and we took out the low of that 1 minute candle. We did not push all the way up to the pre-market high. That's important. A lot of times you'll see it push up there and then go lower if it's going to go lower, but we didn't even have the strength to get back up there. That says to me the work was already done pre-market on the upside. And the whole Asia session last night was just an awful chop fest in this area right here where the pre-market high is. It was completely untradeable and awful. And I tried to trade it. I've made the decision. Coach T keeps telling me, stay the heck away from Asia session. I think I'm going to listen to him finally. because the money's really to be made in New York. There's no sense in messing around with the um, Asia session, really, unless it's just your only option. There are times where you can make money in Asia, but you really need to pay attention to higher time frame highs and lows. So, based on this, the high I've got it marked out in purple, and the low I've got it marked out in orange. This is the pre-market low. We push up, then we come back down. We take out that low. I would use this. I would refer to that as a breaker on the bearish side, which means this is the lowest point before we ran up and ran that liquidity. There's no red candle here, but we're just going to use the bottom of that as our breaker. And then we push below it, take out a little bit of this liquidity and try to push back up. We make it to settlement, try to push back up and fail. We don't even get back to it. And then we pull away with a fair value gap right here. So that's our entry. We got the fair value gap to the downside. You'd want to try to get in there, but we don't even make it back up to it. So you could just mark it in. Usually when this does this, you can get at least 70 points on that initial push. On this initial push, you got a lot more than that. It was a deep dive. And then here we kind of found a bottom for a minute, came back up, took out this liquidity, failed to make any higher highs, and then we pull away with another fair value gap. So if you were not in at that point, you could have gotten in right here just before 10. I think you would have been able to stay in. Yeah, you would. If you entered right here, you want this candle to finish. And so this one would push back down and right back up, making you a little scared. Enter somewhere in that fair value gap for a push down. It didn't go much higher than that. And then of course that next push was the big one. It really ripped. And it still continues to go down today. So that is a beautiful setup right there for trading off of that first 1 minute candle. If you look in ES, I was expecting it to bounce when it took that low and look at it bouncing. We may be able to get a breaker on the other side too. So similar price action on ES. Let me move this over so we can get it zoomed in here. I have only regular trading hours. This is our first candle of the day. It pushed a little higher and it did not take that 4-hour high. I was looking at that and thinking, I was thinking maybe we would go up. Pre-market high is way up here. But we pushed up, swept liquidity, whatever liquidity it wanted to grab, and then we started offering lower. This candle got below that, what I would refer to as our bearish breaker, the low of that first 1 minute candle, but then went back up and took out that high. Now we could say we definitely have a breaker here if you wanted to use that. But once we got back below this, you see how the candle bodies never went above it? All you need from there is a fair value gap. We want to see it push away, leave some liquidity down here. It took this. So I was like, this might be the reversal. But when we came back up and touched it and then pulled away with a fair value gap again, that's where you would want to get short. There's actually one right here. It got violated immediately, but there is one right here at settlement. I don't know that I would have wanted to jump in there. Volume imbalance to the downside here. There's definitely one here. I would have probably jumped in when I saw this one right here at the settlement, but I don't know. I'm not sure if I would have gotten in there or waited for it to take that other low. It's kind of early. This is right before 9 o'clock. So yeah, that's the little fair value gap right there. It did violate immediately, but then pulled back away, big wick back to the upside. This failed to make a new high, and then we ripped lower. I think as soon as it took that low right there would be a good place to get in somewhere in this fair value gap. Just mark it into that sucker and say, okay, we're aiming lower. But this is a bounce point normally. So if it does not bounce off of that and then make a new high, which this one did not make a new high, then it makes a valiant effort to push back down. Just get in. Worst case scenario, you're going to lose your first trade. Best case scenario, it's going to rip like it did today. Let's say you missed that entire run. This pushed up and took that liquidity by a tick, and then we went on another big run. Not as big as the first one, but it's still going. Now look down here. We took out this low that I had marked. I think it may be a 4-hour RTH, but it is right there. 4-hour regular trading hour low. We finally found a bottom, took it out, and look what's happening. So in this situation, what we would want to see is this would be our bullish breaker to the upside. And so we would want to see it push up, leave some of this liquidity up here, come back down and fail to make a new low, and then pull away with a fair value gap to the upside. And then we would have a good entry. But right now, I mean, it looks good. It may not pull back. It may have already gone down as low as it wants to, and it may not pull back. Or it may range here the rest of the day. You don't know. The move of the day was already made. So at this point, usually in the afternoon, they try to take back any money that anybody made on that move the first initial move. So it's not as um, reliable as the first move of the day. But if you do see this push down and try to make an attempt to go lower and fail, upside to one of these swing highs would be a good trade. But you got to keep also in mind that 6,900 is right here and it lacks that number. But we may go all the way back up to settlement. It does crazy things. We took out quite a few of these lows here. I'm not sure what this line. Oh, I just marked that line just because I saw it and was like, well, maybe that'll be a bounce point. And it did have a little bit of consolidation there. But yeah, all in all, this is what I want you to look at and remember and mark out on your chart every day. Pre-market high, reversal point. 4-hour highs, reversal points. Pre-market low, we're going to go up. It'll go there and then go back up. And always mark out that first 1-minute candle and use it. If it gets above there, we're going long. If it gets below there and pulls away with a fair value gap, that's our signal that we're going short. And you can usually get in and make a few points. And don't trust me on that. Go back and look. Mark them out on every day. We can do one right here. The one that happened yesterday, I was helping my sister move, and it's the same scenario the other way around. One of the 4-hour lows we took out today was that one. I'm just going to change that to the low of this 1-minute candle. I'll just delete the words. I'll just put in your first minute. All right, and then we'll clone this one. And we'll put it up here on the top and change it to a purple. So it's the same scenario we saw today in reverse. And you see it a lot. Okay, so we opened. First minute candle went up and down, pretty good sized candle. Push down, failed to make a low. Finally, we get above it, pull away with a fair value gap, entry. And what did it do? It went up and up and up and then just chopped the rest of the day. This was at 3 o'clock. This was MOC right there. We just stayed up there and just kind of chopped around the rest of the day. That would have been a fantastic trade. It basically just did today in reverse. A 50-point move. We can go back and look at another day. Let's see. Here's one where you really have to watch those fair value gaps because it was chop, chop, chop all morning. This one, if it's not making a move like it did, like you just saw, then we leave it alone. It's just, it will use this as a range. So here, same scenario. This is the low. We need to see a fair value gap below it and a willingness to continue respecting it. So in all of these cases, we typically will see when it does break below, it come back, touch it, and then continue lower. And so, like on this one here, we did have a little fair value gap. It was immediately violated, and we came all the way back down. This would be our only place that we could enter. Like right here, immediately violated. You wouldn't want to get in there. But this one, this little chop, 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 chop session up here, took that liquidity, it pulled away. You could try to get in there and aim for this, you would have got it. But when we come back up and we fail to make a new high and we pull away with a fair value gap, you can jump in this fair value gap here or there and aim for lower hanging fruit there. But this first little set, this is a day you would want to leave that first 1 minute candle alone until we break below it. Now, you can also say, okay, well, that's no longer in play, and this is our breaker. We pulled away with a fair value gap. You jump in there and just aim for that low. But it is in a 15-minute range, and so you might not want to mess with it. Let's go back to another day where we opened right here. Beautiful. I don't have the pre-market high marked out and the pre-market low marked out. But if we just use regular trading hours only, we can use that one as the high. I'll just change it to purple for a second. And then we'll make a new one down below. I should just move it out of the way. I'm just going to delete it and just mark it with this purple line right there. And we'll call it, I'll just make you know that it's the first minute. How about that? So this is very similar to the setup we had today. Okay, first 1 minute candle of the day. We push up, we take out some liquidity, who knows what, doesn't really matter. Right now, it doesn't really matter. And then we break below the low with a fair value gap. We try to push up higher on this candle, fail. We consolidate, and then we move lower again. Jumping in this move would have been just fine. If you didn't get in there, getting in here would have been great. But we did sweep that liquidity. So this would be more of a cautious move. But it was one of those days where it just went ripping down and ripping, ripping, ripping. Oh, that's today, huh? Is that today? No, it's not. But it's doing the exact same thing it did today. Working that range. Let's look at this day. You can go through your charts and do the same thing I'm doing. This isn't rocket surgery here. First 1 minute candle, the high and the low. We break above it, but there's no fair value gaps and we don't stay above it. We come back down, we use that 1 minute candle as a range. We try to push higher one more time and fail, pull away, fair value gap, dip below it, come back to it, fair value gap here, sell short. If you had the patience to wait till you see this one, sell short, and that fair value gap right there. Or you could have jumped in one of these. I don't know where you'd have been aiming, half gap maybe. Jump in one of these and aim for half gap. But this right here, we took out that liquidity, we pull away with a fair value gap. We don't go any higher than that fair value gap. And then you could aim for gap fill or even lower if you wanted to. There's a low right there we could aim for. Whichever one of those you wanted to aim for. And then we got into FOMC day. So it even works on those crazy days. Let's look at this one. Open with a gap up. We got the high of the first minute and the low of the first minute. We push up, take the high, we come back down, take the low. That makes this our actual last up close candle before the run down. We didn't even fill half the gap. And then we pull away with a fair value gap. We come down, try to make a new low, and we don't get there. You could get in right there on that fair value gap. Just mark it in. Where do you aim? At least here. If you have something else marked up above, you can aim up to there. And just, you don't know where it's going at that point. I think this may have been when we were trying to push those all-time highs. I think that was it. Previous all-time high we were trying to push to. But the fact of the matter is, once we got above it, pulled away with fair value gaps, if you got in, if you just marketed in like somewhere in here, this would have definitely made you pucker up. If you waited for that pullback, then you would have been fine. You could have got in here. This would have either filled you or made you sweat a little bit, but your stop would be below here, so you'd be fine to at least aim for there. I use those candles every single day. And this is without even considering the pre-market high and the pre-market low. Those are good to have on there, though. I should have marked that one first, the other one first, because now I got to change color on this one. Okay, so pre-market, the first 1 minute candle right here. We push down into this gap. Probably filled it about halfway, pretty close, maybe 25%. And then we rip higher with a fair value gap, dip in there. And when I see that much of a rip, I'm jumping in. And where would I be aiming? Just wherever I could find a recent swing high. There's one there. I would be aiming for that. And we would have got there. Isn't that crazy? This one is a gap fill opportunity. There is a 70% chance that this gap is going to fill halfway in the first 30 minutes. Just halfway. You can just put a fib tool on it, mark it out. Let's see, I think I was orange. Yeah, I was. And so here's that first 1 minute candle. What did we do? We pushed down and we went up. Did not respect the fair value gap. Down again, higher low. Pulled away with a fair value gap. You could aim there. But we still have this 50% chance down here that we fill half the gap. So once we get up here, we start pulling away with fair value gaps. We get below this guy. You could have possibly gotten in there and taken a beating. The way I have mine set up, I can lose 4 trades, and then I'm done for the day. I only risk $50 a trade. So if I lose 4 trades, I'm done for the day. and then the next day I'm gonna get one of them. But what if I lose my first three, and the last one is one of those 200-point moves, or in NQ in the ES it'd be like a 50-point move. You can make some money on that. Okay, so yeah, we swept the liquidity above, then we pull back pretty aggressively, come back up, touch that 1 minute candle low, pull away with another fair value gap. You mark it in there, and you aim for at least half of this gap, at least half of that gap. The way I mark out half gaps is our open was right here, and that's where we closed, right there. So this is half gap. When we touch there, we pull away with a fair value gap. I mark it in, and I aim for that minimum there. It went to 75%. That was all it wanted. And you can see a reversal pattern there. Our last up close is right here, so you wouldn't want to get involved until it get above it. But we did. We got above it, fair value gap, wicked into it. And now you can aim for the high of the day. Beautiful reversal. But yeah, that first 1 minute candle does work. Man, look at that run. That was when the Trump news came out. See there? High, low. Took the low, took off running. Mark it out, folks, every single day. Oftentimes you can get a trade off of that sucker. And what did we do here? Did we fill half gap when we pushed down? Well, I'll be dang, we did. Almost filled to 75%. That's the high. That's not the open. This is the open. Half gap, almost to the tick. Looky there. And then that's our 1 minute candle right there. First 1 minute candle. Get above it, fair value gap, mark it in, aim for most recent swing high. One of these, one of these, one of these, just wherever you're comfortable taking your profit. Maybe you take an opportunity here. You're wanting it to go there, but when it comes back down, maybe you add. When we don't make a new low and we pull away with that fair value gap, maybe you add another micro in there. You'll already be substantially up by that point. Turn this thing into a moneymaker. Thanks for watching. Oh, before I go,